Something big could be brewing in markets right now, with rotation starting to occur throughout so many stocks this earnings season. While 2024 has all been about 6 stocks and specifically Nvidia, there are cracks starting to show in the S&P 500 with a big rejection week over the last 24 hours. But it's not just there, it's also in the biggest stock that everyone's talking about right now, Nvidia. A movement up to almost the 750 line has us looking at the options markets for more identification details. And of course, the Russell 2000 is starting to show signs of life once again. Well, welcome back everyone to The Daily Show, where we talk about markets around the world together. My name's Tom. We've been running this show for over 3+ years. And if you love everything to do with macro, leading indicators, and of course the hottest charts and stock movements, then stick around. We've got a big show coming up today. If we talk about rotation, this Monday was it. Of course, we have here a huge amount of rotation away from the big tech that's been doing so well and into the broader market. And this is a great sign if you've been looking at the Russell 2000 specifically over the last couple of sessions. It's been a big breakout, and we first reported this late last week. When we talk about fear and greed, though, we're in the extreme greed reading still. So we have to tread cautiously as we have approached that 5,000 level, which we tend to see some type of negative reaction off. We'll get more of that a little bit later on in today's video. But let's go through the pace of a rate cut, because this is going to be an important chart that you may want to take a snapshot of later on in the year. And the reason why you need that is because if we have a slow cycle rate cut, it could be actually quite good for markets in comparison to a really fast cycle rate cut. Remember, the Fed or the central banks around the world, they never rate cut out of the goodness of their hearts. They do it because they broke something. So it depends how much they broke the system to how many times they have to rate cut. So more rate cuts, not necessarily the most positive sign for growth around the world as they're trying to stimulate the economy. And speaking of stimulation, we're actually seeing accelerating global growth, which is technically good for equities everywhere around the world right now. And it does have a pretty good generalized annual gain when we see this. It only happens less than 50% of the time, but in this case, we're actually seeing a fairly robust strength in the global economy, at least for now, even though you may not think it's there. So where are the problems in the market? Well, of course, the one that everyone keeps bringing up, and we've also talked about this and slightly improved over the last 24 hours, has to do with the divergence in breadth. And this, of course, usually comes as a warning. You can see on this chart, we posted it over on our X account, links in the description down below, that we have a huge divergence between the percentage of stocks above their 50-day moving average, which is usually a good read of breadth, and the percentage of actually overall how well the market's doing. Now, when we tend to go into these periods where we have a breadth reduction, it doesn't usually bode well for markets. You can see here we saw breadth absolutely getting caned. And then, of course, we've had this massive resurgence thanks to AI and the big tech stocks. So it's really a market that's being run by the top 6 stocks, and in particular, Nvidia, which is this one here. Now, if you put any indicator on Nvidia, you're going to instantaneously see it's in super overbought territory. But you can see that it's done that for a long time. In fact, since 2023, almost most indicators have shown that we've been in an overbought market. Just remember, if momentum and price action is on the side of the upward trend, you wouldn't want to fight that unless you're using an option, and that is a prediction, not necessarily the reality of what you're actually seeing on the charts. We often say it here, patience, react, don't predict, and Nvidia showed its first little sign of weakness, but not enough to go off over the last 24 hours. And let's explain why that did occur. One of the big things has to do with the amount of calls in a call wall that's basically sitting at around 750. Now, if we do breach the 750 barrier, you can see 800 would be the next magnet. And what you'll notice that over the last 24 hours, we saw Nvidia get up to around that 746, and then it just sold pretty brutally down. In fact, it lost around 4% from that peaking period. So this is the type of thing that you start to see when markets get jittery. Now, by breaking through 700, 750 became the next target. So that's, of course, where it's sitting. But this is a very important chart to be watching. And I think Nvidia should be on everybody's watch list right now. You can also see it here in terms of the overall expiration dates across the board and why 750 is such a big level. 750, if it breaches, leads into 800. And of course, underneath 700 could open up the bear sellers as well, which we'll talk more about if we get price action later on when we look at the charts. So what about the S&P 500 then? We've already talked about the options going on in Nvidia, But what about this SPY itself? Well, we do have a little wall that seems to be sitting around that 50-50 zone. And at this time of recording, we've kind of made it close to that area, and then we sold off back down to 50.26-ish. If we get underneath 5,000, of course, that's going to be a very big point. But I've talked to a couple of options experts as well, and they're looking at 49.80, 49.90 as being a critical point for puts. And if the markets are able to get underneath those levels, it could be a bit of an early warning sign that markets are really starting to show some signs of weakness. Of course, then we'll look for price action based on those charts themselves. For now, the trend is up, and there's no real way that you can go against it unless you're making a prediction, which is not usually the way we like to do things on this channel. What are some other weird bear signs that are starting to appear? And there's not that many of them since we've seen improvements in things like home builders, transportations, and other indicators. Well, one of the other things that's happening is VIX is starting to spike again. Markets up, VIX up. And that's showing you that there is some concern ahead of the big news that's coming, which is, of course, the inflation news. So we've got inflation news coming, we've still got earnings season, and then we have a seasonality effect, which tends to happen on this Friday event. So usually we've seen positive reactions to Friday, and we'll talk about that later on, but maybe we're about to see some weakness. Again, here's another example of some key points for the S&P based on options themselves. So let's talk about some other things that are occurring. I see this chart go around a lot, and we've already talked about credit card debt. Now, debt actually is a great creation of growth because, of course, if we borrow, then we spend, then that means that there's further growth. Now, eventually it becomes a big problem, but you've got to remember a lot of people are saying, look at the credit card debt, it's increasing, it's increasing. It's not really going to give you any type of early warning signal. If you actually have a look at the previous recessions, you'll notice that the recession's already calling, then you see the credit card debt usually slow around that period as people freak out, and then of course it reduces as everyone tries to tighten up. So this is the same thing we saw in 2020, except in that case we had stim packages allowing people to sell off. But if you notice, we are at all-time highs, and no doubt credit card debt is a problem, but I don't think it's a trigger towards the sell end. An interesting chart here from TIPS, the Great Unwind. Assets of the 10 largest TIP ETFs shrink as quickly as they've surged. Yep, that makes sense. Of course, it is a change going on here in the markets in terms of rotation. Another interesting one here, if you want to have a pause and look at it, is, of course, the tape versus, of course, the breadth, and to have a look at the annualized return. I thought that was a good chart for us to put in. So let's talk about market seasonality and what goes on. So first up, we all know the mega cap 8 stocks or 6 stocks, whichever ones you want to follow, they're all making new all-time highs. And if it wasn't for these stocks, we'd be really far behind. They're also built in with some massive earnings triggers. So moving forward, if they don't hit their targets, it's going to be bedlam in markets. So just remember, the big mega caps have to hit their targets. And where is all the money being flowing into? Well, a huge amount of it up until recently, up until last week, has been flowing into, of course, the big mega caps. In particular, we've seen things such as CTAs being very extended on the buy side. In fact, they're all in pretty much across the board. And we know that if this shifts and it goes down, it could be a trigger that if with the price action that we have seen a peak, at least temporarily, until we get that nice kind of pullback. And we will report if that changes. Of course, CTA positioning here for the S&P and for the NASDAQ continues to be bullish, at least at the last read we've got. When we change, we'll update you those. So make sure to subscribe to the channel, and we'll keep that one as one of our lead indicators. Let's move over to the S&P 500 though. 1,000 level has been achieved, and of course 5,000 has been hit and breached. Now, generally speaking, we've sold almost every time we've come up to these levels. 4,000 just before, we sold off a little bit. 3,000 we obviously sold several times. 2,000 we sold initially and saw a pullback. This time nothing's happened yet, but we are still around it. So 5,100 is of course the big call level. 50-50, 5,100 are the big zones. But it's an interesting stat to keep it there and to think about. Now, why are we bringing it up? It's mostly due to seasonality. And again, we don't have the signs yet to show any real weakness in the markets. We're looking for it, but we haven't really got those signs. The S&P 500 and February option expiration, the big OPEX, is this week. Now, this is an important time because what we tend to see is a weakness on Friday and a weakness afterwards for both the Dow, the S&P 500, and even the NASDAQ. And this is what we call like the February, mid-Feb sell into March. And it's happened quite consistently. It's one of the more consistent kind of sell-off events that tends to occur in markets. and it's happening all this week. So, of course, volatility is set to spike into the big inflation numbers, and then we're going to probably see the way the market wants to trade. Does it create structure towards the downside or keep boosting up? Now, for anyone that's worried and saying, oh, I'm scared of the markets, you don't really necessarily need to be. 5,000's been breached, and we know that when we breach a level, although we may still get a pullback, overall, the 6-month return is actually very, very good. Now, we don't have too many reads for this, but you can see here that we have 5 previous reads, and 100% of the time, 6 months later, we've been up. So again, whatever the pullback is probably going to find some elastic demand of buyers initially. Another big stat for Friday is the fact that since October and the lows, we've tended to see very bullish moves coming off the Fridays themselves. Only very small negatives coming through on the Friday, and overall very, very positive. If this changes based on the seasonality, based on the OPEX, then it could be that something a little bit strange is going on in the markets and we need to pay attention to it. Another thing that really is showing itself is a huge divergence between the Russell 2000 and the S&P. And we already reported and talked about the idea that TAN, clean energy, small caps in general that are reporting this week all offer better opportunities than probably the big mega caps right now at their prices. This is a 50% discount, and we're still over about 18% down, maybe 16% now from all-time highs on the Russell, thanks mostly to regional banks, but also so many hypergrowth stocks and technically innovative companies that may benefit from AI are down pretty hard and showing signs of potential base formations. Speaking of a base formation, let's talk China. Of course, thrust coming through about a week and a half ago, which is a fairly big deal. And we've also seen some strength in the market. Now, I've noticed in your comments, a lot of people aren't won over by this. And I think there's some really great comments. We talked about it on our Monday show for the Open, and there was some great discussion in there about the long-term ramifications of China in terms of investing. Now, we're looking at probably an oversold market that's capitulated, and there are some good stats coming up we'll go through. But this is the biggest problem, and it's got to do with population. The percentage of population age that's 60 and older is predicted to go incredibly high. By 2040, due to the one-child policy, we're going to be in the 40% plus. Now, this is a long-term big problem. And of course, it cannot realistically be rewritten, but it is something that you need to be taking into consideration. And you can see how much higher it is than the US and Japan and other countries around the world. And obviously, Japan's considered to be one of the oldest demographics in the world. Let's now move over to why there's some interest in China, and then we'll look at the charts later on. First up, we have, of course, the market cap of a couple of stocks, being 4, being bigger than the entire Chinese market. Well, that's one interesting thing. The second one is, of course, that we've seen a Lunar New Year cycle start to play out. We're in the year of the dragon, and this usually means that we have a bit of excitement happening over the next 20-ish days, at least based on stats alone. So that's an interesting one. Then, of course, we have Chinese stocks tend to do well after replacing their main regulators. We have a downgrade by Moody's, which happened late last year, which usually signals the next year is relatively positive. And there's a magnitude of interesting previous stats that show that maybe the market's been oversold. We'll bring it up on the charts later on, but it is a very interesting market. And it's the first time we've really done so much discussion about it over the last 3 weeks, because it's at a point where, it's been selling off for around 2 to 3 years. And that's usually when you start to see a bottoming effect, especially when you've got so much policy decisions coming out so quickly. Doesn't mean that it's a great economy. It's not, but it has sold 70 to 90% on some big stocks. Let's talk about earnings now, because we have a lot of earnings coming up, and there's some interesting ones, including Hood, which we reported on. We look at the charts a little bit later on, which had a nice boost and an after-hours boost as well. We'll see the report here Tuesday after the close. Shop in the morning, Datadog, a great one here. Coca-Cola as well. Then we've got Airbnb, Upstart, Barrick. So many Cisco, so many medium-sized companies that a lot of you guys trade out there. I think Coin will be interesting just out of sheer, interest. But that'll be one. Roku, one of my ancient nemesis stocks. And a lot of these are in pretty interesting bases. So if it's going to get wild, it'll get wild. And this is why. The options market is predicting 14% plus moves on some of these stocks. Shop, Twilio, Roku, huge moves. And that's just to say the least. There are so many big ones that are coming out And I think you've got to get ready for some massive volatility that's about to come through over the next couple of sessions, particularly in these smaller stocks. Where we haven't seen, well, we've seen volatility, but maybe towards the bull side, has been Bitcoin. And I'm loving what I'm seeing on Bitcoin in terms of when we broke through that supply level, the little resistance that we were talking about, we continue to see rotation. And as we've discussed, we're kind of looking at just underneath that 51K. And the reason why it's kind of exciting is we beasted through to 50K within only like 2 or 3 sessions. So is this normal? Yeah, it does tend to have a pretty good track record. And particularly you get that kind of May to June middle run that does tend to occur in most years. You also got a very similar run to the rest of the market, which is October, November, and that's what happened last year. So Bitcoin definitely getting a little bit more exciting coming into this year's halving event, and I think there's some big things ahead for that particular crypto. So let's now move over to the options market, and of course there were some big options movements, including ARM, which is on a massive tear at the moment, getting a huge amount of calls, 14 times average 90-day volume, and 30% in one session. This one here is it's ridiculous. It's moving at a rate that is so quick, and it reminds me a little bit of when we had that 2021 movement. You don't want to fight that system at this stage. It is an absolute roller coaster, and there's definitely a squeeze going on that stock. Conversely to that, we obviously saw Nvidia go up and then come back down straight away, getting huge amounts of call volumes, almost at a 2-to-1 ratio to the puts, which tells you, I guess, a lot about what's going on. And in general, FOMO took control over the last 24 hours. You can really see in the options that there were huge amounts of calls coming through. This is a multitude day, and we've had many days like this at 60% plus calls, which is showing you that we're very toppy in the way that everyone's stacking in on calls now. And this is not a sell signal by itself, but definitely you want to be watching price action. Today's total option value almost hit 43, which is above the 40.7. We're already seeing options this year kicking it off with massive moves. And of course, 31% of the trades were done by retail traders, which I think is, almost a record in terms of what we've seen since we started tracking that stat. Let's now move over to what was kicking through the markets. And as we kind of thought, clean energy and solar were some of the best, and little weird stocks and weird sectors were doing quite well. A pickup also in regional banks, which have been under fire for quite a while, and a rotation out of big tech. Now, this is there's been actually quite a few days of this now happening, and you can see here on a 5-day rotation that we've had 15% up in clean, 15% up, or 14-ish in clean, 15 in solar, and gold's been suffering due to the fact that yields are actually going a little higher here. So what's really occurring is it's rotation across the board. Semis have been still very, very strong, but you'll want to watch Nvidia, and you'll want to be watching these clean energy stocks in general just to see whether they're continuing to rotate up. And if we keep getting this, it's improving breadth, which is obviously better for the hold above 5,000. But I will tell you, and I'll put this into the next video, that it tends to occur at this time of year. And it usually runs through actually even into just after the OPEX, which happens this Friday. So it's a very interesting stat coming in the next video. So stay tuned for that. S&P 500, what's going on here? Well, central bank liquidity has been stalled for quite some time as we've rallied through both World Central Bank and the Fed. So they're not doing much. The skew is also interesting because it's right back up. A lot of people saying, Tommy, don't use skew anymore. Well, I use skew when it's worthwhile using skew. So generally with skew, what you're looking for is a historically big level, such as this 160 zone, and then you're looking for a couple of days that crush it back down. And that's a sign that things are getting a little bit scary in the markets. Now, we haven't seen a super skew crush yet. We are looking for it, but we did see a little bit of a sell off the 160. So skew's coming back for discussion. VIX and volatility in general was spiking a little bit. But you can see it's quite still low. And I think the thing here that I noticed was that it gapped up, of course, with the VIX, and it is coming off that base of around 12 to 13. So we're hitting 14. A breach past 15.5 would be a huge deal. So make sure to watch for that. If that does happen, it opens up all of this range all the way back to 20 and volatility to come back in. So the VIX still should be looked at, and the VVIX should also be watched. So remember the volatility of the volatility spiking a little bit over the last 24 hours because of the big news being the inflation figures coming. Let's move over to yields. 4.5, still important. Do I expect this to be volatile? Yes, this is a big zone. If it breaks down from here, then we're probably going to see stocks rally, in particular small caps I think would do okay. And if we do see this breach through, then I think we're going to the 4.7 range for yields, which is going to put pressure on treasuries and going to put pressure on quite a lot of markets, I think, as well. US 10-year, 4.2 is the read. And of course, that opens up the idea of a 4.5 on the 10-year. So watch that. And also, we'll have to be careful in treasuries, because if that occurs, you're going to see treasuries potentially get down to like 89. I still think they're going to do well over the next 12 months, but this is sometimes what happens. A big level here for treasuries, and one we've spoken about several times together. On the positive side for markets, home builders continue to go up. We were talking about this being an accumulation or a distribution. It breached the upside, signaling that we've got further runs currently in the markets. It could be a massive blow off. You can see here there's a huge run. In fact, it's doing a big percentage. I mean, you're talking home builders up 40, almost 45% now since October, which is a massive deal for this particular market. Dow Jones Transportations as well, if you have a look at that, you can see that it's held steady with a breach above the high. So still quite strong and no signs of weakness there at this stage. Dollar index waiting for the announcement. It keeps pressuring in on this low, which is, of course, where we're seeing a pretty big level of demand. And if we do breach above the 104.50, expect the dollar to blitz and go to 105 plus, which I think is going to be a big deal for it. And obviously that could put pressure on the downward side for the markets. US oil. Now, this one actually went to the low here and then came back up. And it's interesting. Around this level is where you'd usually expect like a bear to rejoin into the markets based on that price action. Maybe it's a little bit too small time frame. If we do breach out, oil could be a precursor as well. It's probably waiting for that news as a fairly decent proxy to show that there is something a little bit worrisome going on with inflation still. And if oil does breach, then we're more than likely going to go through the $80 barrel and then, of course, go into the 84, maybe even 86 a barrel, which is going to put pressure on, I think, all of the markets around the world. Oil's one to watch this week. Tesla, too much. The resistance is too much for it. 195, as we expect, is a big zone. Resistance proving too much, and it's stuck in a range. Good for credit sellers, as we first reported after the earnings. And it's continued to be pretty good for credit sellers. So that's kind of where we're looking at this point. You can see the key levels on the charts. Semiconductors, is it a day of weakness? Maybe a little bit of a sell, but mostly it came down to, of course, NVIDIA, which we'll put on the charts now. Now, NVIDIA, you'll notice, reached around 745, so near the 750 level. And this is a big zone for the markets because, of course, it's where we tend to see anywhere these call walls are. If we see selling off those, it shows you that maybe there's a little bit of a sputtering. Now, this thing is absolutely standard deviations away from moving averages on the higher time frames. It's in a rally. This is not a good enough sign to say it's sold off yet or anything like that. It's an early warning signal that somebody did sell a big position after it got near that 750, but the trend is still up. It's still intact. And of course, we'll report back if we see any changes on this moving forward. Pretty big sell, but nothing unusual just yet in terms of, absolutely diabolical selling that shows you a big player has gotten out. I do expect NVIDIA, though, to have one of those days where it just eventually loses like $100 or more in one session and freaks everyone out because it's starting to move very, very quickly, as we saw getting near Amazon's market cap for a second there. What about Hood? Well, this did have that double bottoming pattern on it coming into the earnings season, and we know it's already kind of trying to rotate up. Hood's got an interesting base on it. It's what we call a shelf, which has been sitting for a long time, and it's been here for a while. Now, if you know anything about this channel, I'm a huge fan of not going into anything to do with IPOs until they've kind of proven themselves. Now, if you get in pre-IPO, that's fine, but usually I like to wait 18 months. This one's been sitting for years down below, and a few of these big stocks have been, and I think it's a very interesting level for Hood. So some nice signs over the weekly, great rotation, good after hours action. Now it comes down to earnings, and there's a lot like this, whether it's Hood, whether it's any of these others, a lot of them have these types of bases on them. Let's move over to solar. Good day for solar. Not bad at all. Up 4%. Enphase, even better, which is one of the lead solar indicators. And it does look like it might have bottomed for now. So this is a good sign that we could be seeing rotation. Even with drops, we might still see pickups. Could we have hit the bottom for solar and solar stocks? you can see how beaten down they really are when you look at the charts from where they were in that big bubble. And just to give anyone an idea, you might think right now is crazy in the market. What about over here? If you're new to the markets and we often have what I call fishbowl memories. That's a rally. That's a really crazy one too. And that was happening in so many stocks back then. And you can just put any of these charts on, put on any kind of marijuana stocks, 3D printing stocks, AI stocks back in the mid 2000 kind of 15, 16 period. Lithium, there's so many of these kind of things that occur. So it's not the first time we've seen markets rally like this. It's just maybe the first time that you've seen a huge amount of mega caps pulling along the market, which is, really more of a 2000s type of thing. Let's now move over to the major indices. First up, we'll start with, of course, the Chinese markets. You can see here CQQQ trying to get through that daily 20, which has been a bit of a barrier for it. And this is a pretty important zone, so we'll see whether it can breach through. Some signs of life in this market. We've since recovered from the bottom, almost 10%. So it just shows you how volatile this market is and how much potential opportunity is in it. Hang Seng also still showing signs of some recovery. Of course, we're not going to be necessarily open here, but you can see that we have this high, and that's really going to be where we get big momentum coming back in. At the moment, we could be forming a base though, so we'll keep watching it every day. Let's move over to the Aussie market. Nothing much. It's broken out and above, signaling some strength. Obviously, we're above a multi-year high here, so we're just finding maybe some accumulation patterns there. IWM, on the other hand, really strong movement. The futures market really showed us this when we were taking a look at that daily kind of setup, and we really noticed that it strengthened when it broke through here, because of course this is where we kind of theorized the last bears would sit. This is where the bulls would sit. Once you breach this, as you breach this, it gets very, very strong. So it does look like that IWM could be moving into the 2090 kind of zone, which is what I've theorized a few times. So I'm thinking a new high could be in store for the US 2K based on the price action that we're seeing so far. What about the NASDAQ? Well, if it does rally, we may have still a small sign of weakness. And I mean really small. You'll go on 2-hour chart here, definitely just trying to hope for something there if that's what you're looking at. But yeah, we do have a small break of some structural zone here. A breach and a pullback back to that zone may have bears around it. That being said, the trend still remains fully intact on things like the daily, things like the 4-hour, the 8-hour. There's no changes. And do remember the 20 moving average in particular is the one we're looking at on the daily. Because if you go to the SPX, you'll notice that it's been hovering around that 20, and especially the futures where it keeps holding that zone. So really no signs of weakness, big weakness yet. Underneath 49.80 on the S&P, maybe that's starting to look a little bit weaker. And that's where I think, day traders and scalpers that are trying to go against this very, very strong trend will be interested, and you can see why. This is what happened. A few days trading just below 5,000, breached out. Now we're coming 49.80, a huge zone with puts all over it. So we'll see what happens there if it does end up coming down. For now, trend is still intact, and that's how we're looking at it. Now, Bitcoin, big movement, 50K achieved first time since 2021, and now we're moving up to the 51K. So I think it's 50,900 or something is one of the targets I have set for it. Once it breached through here, this zone here, and of course 59 become the most likely levels. And if you're in it and you're a Bitcoin maximalist, congratulations. Generally speaking, it's better to be in a Bitcoin early in these rallies. And then if we do have a proper rally and hold, then it'll be Ethereum, because Ethereum opens itself up to a big 3K level. So you're talking about like 3-4 as being the next zone. So if Bitcoin can manage to hold and sustain, even break through 51K, I wouldn't be surprised at all to see Ethereum at 3,400 very, very soon. So that's going to be an interesting one here for the crypto markets, and things might just be getting started on those markets. So that's it for today's video, everyone. And I hope you had a great weekend if you're in the US watching the Super Bowl. And if you're a Chiefs fan, then congratulations to you. Otherwise, if you're from San Francisco, you're probably not very happy with how that game played out. Either way, thank you very much for watching. Subscribe, smash the like button. We'll see you in the next one. Bye for now.